evening, everyone. So can someone let me know whether you guys can hear me or not? Can anyone try to comment and see whether you guys can hear me? Thank you. Okay, so we will wait for 2 minutes more to wait for more people to get here. Then we will start the webinar. Before that, please do change your chat to everyone so that we can all see your comments. Hello, Victor. Just let us know whether you can hear us or not. So my name is Jack. Today I'll be sharing, me and Ben will be sharing today. So we'll start at 7:32. Hello, Kai. Hello, Chunjae. Yeah, so make sure when you guys want to type, switch it to everyone so that everyone can see your questions or anything you might want to share in the chat sections. Okay, so without further ado, let us start this webinar. So before that, maybe you can give a disclaimer, Ben. Next slide. So this seminar is not is solely for education purpose, and we should not consider as a financial advice lah. So just a quick disclaimer. So in these seminars, me and Ben will be sharing what you can buy during these high interest rate environments. I'll be sharing one of my favorite assets that you need to know and why is it a time to buy these assets and how my plannings on investing these assets and what is the risk. And next will be Ben will be also sharing stocks that have potential and give you guidance on how to do the executions by using technical analysis, and also shares how simple and useful our STAR framework for trading. So stay tuned for that. Okay, so next slide. So before starting the webinar, I just want to let you all know that Ben and I have been using a lot of time to research and look for stocks and opportunity for this webinar. So I hope you all can give more support by us by actively comment the comment sections, because we will feel more energetic and powerful when we see you all actively interact with us in the comment sections. I hope that our effort in the webinar can exchange your engagement with us. So if you are ready to learn something or gain some knowledge from this webinar, maybe can you type learn in the comment sections. So thank you, Chunjae. So more people comments on this webinar, we will feel more appreciated by you guys, yeah, and we'll feel more happy actually. Yeah, so this is not a one-way webinar, so we try to interacting with you guys. So if you got any question, you also can ask during our webinars, and if you want to share some things in the chat, you are free to do it. And maybe you can switch it to everyone so that everyone can see this your comments, because I see someone if you can see there's a to everyone and to host and panelists, so you can switch it to everyone so that everyone can see your questions. Okay, so without further ado, let us start our discussions on this. So in June FOMC's meetings, the Federal Reserve chose to maintain US interest rate at the current range of 5 to 5.25%. So this decision to keep the rate unchanged in June could seem to suggest that the interest rates are peaking, feeding optimism to the stocks market. In this case, should you be happy when the Fed say they're going to stop the interest rates? instead of celebrating alongside the other market participants, it's important to consider how long the interest rate will remain at a high level. So the durations of the high interest rates environment is crucial to observe because an extended period of high interest rate can have a negative impact on the markets and the overall economy. So prolonged high interest rate can lead to a decrease in economic activities and potential result in a recession. Okay, next slide. So after the Fed stopped the interest rate, many would think that actually the interest rate hike is ending this month. But based on the information provided, you can see on the slide here. Here's the dot plot shares on the FOMC meeting in June. So it appears that the interest rate will likely to continue to rise in the future, as indicated by the anticipations of 2 additional rate hikes. So you can see in March, most of the dot is at around 5 to 5.25%. This year, but in June, it moved up to 5.5 to 5.75. So in this case, they're expecting a raise of Fed fund rate in the next 1 to 2 FOMC meeting this year. So next slide. According to the CME group, there's also 88% chances that the interest rate will increase in the next FOMC. So you can see actually the market is already predicted or have that think that next FOMC will increase the interest rate. So next, so after knowing the forecast of the interest rate for the next FOMC meetings, I think you all need to know that the ultimate goal for the Fed to increase interest rates. Does anyone know why the US increase their interest rate? As we know that actually rising the interest rate will slow down the economics. Why do they still do so? Like maybe why does that do that? Anyone know? Maybe you can comment yes or no. If you don't know, then no. Maybe war from Victor. HM Lin. The inflation still high. Yes, correct. So actually the ultimate goals of the interest rate hike is to tamp down the inflations to 2%. So as of 2022, the US has experienced high inflation up to 9%. In this case, that need to prevent inflations from continuing rising until it harms the economics. So high interest rate will lower the value of the money you are holding, and it will reduce the country's spending power. And when inflation becomes uncontrolled, it disrupts economic transactions, erode the confidence in the currencies, and undermines the stabilities of the finance systems. So this is why the US Fed keep on increasing their interest rate to because they try to lower down the inflation rate, even it may slow down the economics. So next slide. So we can see actually from the next slide. So we can actually see the inflation right now. Since 2020 August, you can see on the purple box is at 8.5%. But this month, as of May, the inflation rate has gone down to 4%. And next slide, we will see core PCE. The last year on July 29, the inflation rate is at around 6.8%. And as of this month, the rate has gone down to 3.8%. So noted that the inflation rate from 2022 has dropped down to around 4%, which is a good signal. Means the interest rate hike is working. The interest rate is trying to tamp down the inflation rate. But there's still some room for inflation to go down 2%. So if the inflation rate never dropped down to 2% or closer to the rate, there are still chances that the Fed will still increase their rate. But in my opinions, we are very close to the peak of the interest rate. The US Fed is likely to increase their rate 1 to 2 times and then stop the interest rate hike next year. With that, you may want to switch the focus to an asset class or stocks that can perform well during the environment. So what is the asset class that could perform well during this macroeconomy? What should we invest during the high interest rate environments? So, do you guys know, do you guys have any idea what to invest during this? Chun Ye say bank insurance. Bank insurance. Yeah, should be. Yeah, bank and insurance also one of the dividend stocks. Dividends from Victors. Okay. Thank you for both of you guys. Says your opinions out. So after a few nights of burning midnight oil researching and reading, I found that there is a lower risk with decent returns asset we should all look out for during this macroeconomics. So I'll be sharing what should we buy during this high interest rate environment. There is an asset class that provide a long-term investment opportunities that minimize the risk associated with fluctuating interest rates. Before starting discussions, can I have more support from you all? Comment support below so that I know my effort is appreciated by you all. And I hope everyone can comment so that I have more power to share that. Okay. Thank you, Chunjie. Thank you, everyone. Okay. So sorry, because today I really need more support because we are doing a lot of research on this one and we try to give our best research to you all. Yes, thank you everyone for the support. Thank you. So the asset class that provide long-term investment opportunity is bond. So it may sound simple and not exciting, but hold on a second. Let me tell you why bonds are so exciting to invest right now. So next slide. First of all, bonds are particularly sensitive to the change in interest rate, and the price trends of bond is heavily influenced by interest rate. There is an inverse relationship between the interest rates and the bond price. So when interest rate go down, the bond price will go up. So why versa? So this theory is very important as this is the whole purpose why I choose to invest in bond, since we know that the interest rate hike is close to its peaks. So I think this is the time for us to start looking at the bond and invest on it. So you can see on this slide. So this graph, the orange line is shows that the stocks and bond correlationships. So you can see long term actually stock and bond has negative correlationship. So when you buy bond, actually you does not really affected by the stock market. So this is one of the good things. Okay, so next, besides that, the first thing you can benefit from investing in bond is diversify your portfolios. So I think a lot of people thinks that to diversify your portfolio, you need to buy a lot of different stocks that are in different industry. So let me give you an example. So do you think buying 30 stock is considered as a diversified portfolio? Maybe you can comment below, say yes or no, whether you think buying 30 shares that has different industry is considered diversified portfolio or not. So let us see how's the majority thinks on this. No, yes. See, not really. Okay. Yes, still stocks. Okay. So we can actually see 50-50, yes and no. There's both people answer this question. So maybe let me continue on this thing. So, okay. So if you are having a lot of stock from different industry, including some big tech, healthcare, consumer staples, and many other industries to hedge the risk of your portfolios. All these industries seems to not be related to each other. So for example, when healthcare is not performing well, but big tech company might still go up and perform. Or maybe you can see the REITs is not performing or there's some bad news coming out, but big tech is still okay, but healthcare is still okay. So I think this is what people usually think how diversification works. So however, to me, I think this is not very effective. When the market crash, most of the stocks will drop first, even if not affected by the situations. I'm sure that market sentiment will be not good and people will fear during the crash. So this is because the stocks market always react negatively as the markets and people like us will always sell their stocks first when there's fears and uncertainties in the market. We can actually see if a big crisis happen, most of your stock will drop no matter what industry it is in. And this is how the market always works. No matter how many industry you buy, investing everything in the stock market does not really diversify your portfolio. To me, I think to diversify your portfolio, you need to buy something that has less correlationships with the stocks market. For example, the bond markets, commodities markets, housing markets. So I think your portfolio should have different asset classes to be a good diversified portfolio. And this idea is actually from Ray Dalio, the person who owned world's largest hedge fund, the Bridgewater in the US. And his strategy of asset allocation is to build all-weather portfolio. So this portfolio will have different asset classes like stocks, bonds, and commodities, so that the portfolio is able to make profit in any weathers, no matter high interest rate, low interest rate, no interest rate. All this, he's trying to capture the gains at any weather. So from what we learned from Ray Dalio, we need to get different asset classes that have different directions from the portfolio, from the stocks market in our portfolio. And you need to make sure they are not affected by the sentiments of the stock markets. In this case, buying bond can be a good choice during this macroeconomics. And this is what I'm going to share next. And after saying the advantages of buying bond, so what should we buy and how do we choose bond? So next. So today I will be focused on the safest bond agreed by the world, which is the US Treasury bonds. US Treasury bond is known as a risk-free asset as is issued by the US. So I think a lot of people might hear of US Treasury bond, always hear the Treasury bond, but you only know this is issued by the US government, but you did not know really how to invest on it and what should we think of be aware of when we invest on it. So next. So in this case, I will be introduce one specific options to you, which is TLT. So TLT is iShare 20 years plus Treasury bond ETF. TLT track the performance of the US Treasury 20 plus years bond index and hold a diversified portfolio of US Treasury bond with maturities of 20 years or more. So you can, of course, you can also choose to buy the real long-term bond from US, but I will recommend TLT as it is an ETF. So it has more liquidities and it is easy to buy and sell. For the usual bond, you need to buy at a minimum of 200,000 USD. For me, I don't have so much money, so I will choose to buy ETF. But of course, there's some place you can buy at a quite minimum amount. But I think ETF bond ETF is more liquidity, easy for sell and buy. When I want to buy, I can buy it today, even that the stock market is open now. Okay, if I want to sell tomorrow, I can sell it tomorrow. But if you hold the real bond, the liquidity is very less compared with the stock market. So you really take some time to sell it out if you hold a real bond, a real treasury bond. Yeah, so next. So when considering bond as an investment, it's important to understand the option available and the associated risk. Among the US Treasury bond, long-term bonds are particularly sensitive to the interest rate. So when I say TLT, we are buying a long-term Treasury bond. So when interest rate decrease, the price of long-term bond tend to rise more significantly compared to the short-term bond. This is why I'm not choosing short-term bond compared with the long-term bond. So why does a long-term bond move more than the short-term bonds if the interest rate go up or go down? Because I can give you an example. So when you buy a short-term bond, let's say a 6-month T-bill, the interest rate will not affect your T-bill as much as the long-term bond because it expired very fast. If the Fed increased the interest rate by 0.5%, you are still okay because you just have to wait the T-bill to expire after 6 months, then buy the new bond with higher yield. So your opportunity cost actually is very low. But if you are holding a long-term bond, the interest rate go up, let's say by 0.25%, you will lose the opportunity for getting 0.25% every year. So if the interest rate increased by 1%, you are losing the opportunity to earn 1% every year, which is 10% in 10 years. So this is why interest rates have more significant effects on the long-term bond. So when the interest rate is almost at its peak, from what I think it is, the long-term treasury bond actually is very attractive investment options. So we potentially can benefit from capital appreciations when the interest rate go down if we buy TLT. So at the same time, we enjoy the interest rate given by the bond if we never sell it lah. Of course, the best scenario would be the interest rate go down and we gains price appreciations on the bond. Next slide. For answering HM Lee, TLT is not PTP security. Because I also got buy. So it's not. I experienced it already. So one thing we choose to buy TLT, why we choose to buy TLT, as per what I mentioned just now, the price is affected by interest rate. So the price of the bond is stable and has limited room to go down. I think it's very hard for the interest rate to go up to 6 to 7%. I would not think that US can handle such a high interest rate environment. So previously, the bank saga from SVB has given a signal that the US cannot handle such a high interest rate environment. So in this case, by investing in long-term treasury bond, you are essentially betting on a decrease in interest rates. When interest rate go down, the value of existing bond with higher interest rate become more attractive, driving up their price. And this is what we are looking for. We are looking for interest rate to go down and the price go up, and we get benefit from it. So I think one thing I need to make it very clear, investing in long-term treasury bonds or TLT is a long-term strategy. So the key word here is long-term, okay? The time horizons for this strategy is 1 to 2 years. So please don't expect you can earn money tomorrow, or this is a fast money strategies. Because we are predicting the interest rate movement, it may take some time for the Fed to decrease the rate. We never know when the Fed will lower the rate. To me, I'm estimate the rate will be lower down within the next 1 year or maybe 2. But anyhow, the Fed has to stop the interest rate hike and start lowering down. So it's just a matter of time. Question from Sir Long, US bond is taxable by bond US. Let's say if you gain the dividend from TLT, it is taxable. So if you get the dividend amount is automatic deduct 30%. It will give it to US. But if you buy TLT, you does not have to pay any tax. If you sell also, you does not have to pay. You only have to pay the dividends. 30% of the dividends tax. Okay, so this strategy is a long-term strategy. If you have extra money and do not have a place to invest, I think this strategy is best suited for you. It would definitely be better than putting your money inside a fixed deposit that give you around 3 to 4% for 1 year. But instead of that, you can trade it as a saving and you put it in TLT. Will be you will gain much more better, for my opinions. So my suggestion on this strategy would be doing dollar cost average strategies, or buy a certain amount every month until the interest rate go down. Of course, I think you can build a 30 to 40% of your target position first before doing that. So maybe you wanted to invest 10K in TLT, maybe you can first buy 3 to 4K first. Then you slowly accumulate your position to manage the risk for someone who are conservative. So after introduce the rationales of buying TLTs, I think I have the responsibility to let you guys know about the risk when you invest in TLT or long-term treasury bonds. So the long-term bond is sensitive to the change in interest rate. It can be seen as a double-edged sword. So interest rate go down, price will go up. And when interest rate go up, the bond price will also go down. So this is also a risk when you're buying TLT. If the interest rate keep going up until 6 to 7%, then you will suffer the losses on this investment. However, as per what I shared just now, I think it has lower chance that interest rate can go up to so high, because we are actually predicting the Fed will raise 1 to 2 times or maybe 3, then stop. So this actually also what the market is expecting. So for me, I think the interest rate going up to 6 to 7% is very unlikely lah. But of course, there's always the chance lah. So if you want to invest TLT, this is the risk. And the second risk for investing in TLT would be if interest rate remain at high level for a longer period of time, then the price of bond will not be performing. So in this case, you will lose the opportunity cost lah by buying TLT. So maybe you can see Nvidia is going up to 400%, but you buy TLT, has not really moved. So this is what I say the second risk. And the dividend payout will be lesser than the actual long-term treasury bonds. As is an ETF, the dividend payment may be lower than the actual treasury bonds. So in conclusion, the main reasons for buying TLT is for long-term investments to bet on the interest rate to drop in the future 1 to 2 years. This strategy is for you to get ready when the Fed decrease the interest rate. It may not give you a very huge profit margins as you invest in growth stock, but it will give you a stable percentage of profit in the futures. If you have extra cash and don't know where to invest in next 1 to 2 years. So for this investment strategy, I will compare it with the fixed deposit, because the risk of this TLT going down is limited because of the interest rate is at its peak right now. But the gains of the TLT is actually very high. So the risk to reward ratio is very high, because from 5%, if interest rate from 5% drop to 3%, you can see TLT will bump up a lot, like 20 to 30%, if in a very fast manner. Okay. So maybe I can answer some of questions in the chat. So Victor, can you use CPF to invest? I assume. No, for CPF we don't really can. For CPF it's only Singapore stocks, right? So Zhen Hao, if interest rate come down, stocks should go up. Why is bond a better investment during the interest rate decrease? Okay, so Zhen Hao, this question is very good. So if interest rate come down, stocks should go up. So this is actually a myth. Everyone is saying that interest rate go down, then the stock price will go up. Actually, from a research I see, when interest rate always go down, the economic actually is going to be recession. So, okay, so let's say today interest rate go down, the stock market may have a very short period of bullish time, but actually in a long-term time, it may if interest rate go down, it actually is a signal that recession actually is coming. Because you see, if the economy is very good, the Fed will continue increase their interest rate until the inflations go down. Then the economy is not going very well. Then they will try to lower down the interest rate, and you will see in the long term, the stock market actually will not be performing very well during the interest rate go down. But at the first few years, few months, the stock maybe will go up very good, but at the long term, it will go down based on the history. Yep. Yes, from Kai Lim. I assume IR down equal recession. It's something like that. So actually, when Fed trying to lower down their interest rate, it's actually a signal to recession. It's not that accurate, but there's actually a signal. Okay. So my sharings of my strategy during this high interest rate environment stop here. If you got more questions, you can ask later. If we got time, we will answer it all. So I'll pass it to Ben, and he will be sharing his favorite shares that can benefit. Yeah, pass it to Ben. Thank you.
Hey, thank you, Jack. Thank you so much for sharing about bonds. Thank you for sharing about why we should look at TLT instead of individual bonds, right? Because bonds, you have to spend a lot more upfront, 200,000, 250,000. Okay, maybe you have that kind of money, but I don't have. I don't have yet. Okay, I don't have yet. Okay, so can we all type thank you, Jack, in the comments to really thank him and show him appreciation for all his hard work, his research, and the delivery of this presentation. Thank you so much, Jack. Thank you, guys.
Thank you, everyone. Thank you, everyone.
Wow. Jack, they love you. Like that, I don't need to present really. Jack, you continue.
I continue TLT again. Thank you, everyone.
Okay, hello everybody. It's really nice to see so many of you here today on a Tuesday night. I see so many familiar faces. I see Jia, I see Selong, I see Kai, and a few others. Okay, so if you're wondering why I'm looking left, looking right, it's because I have two screens, all right? So the right one is presenting what I want to share with you guys, and the left one is, the left screen, right, is showing me in the chat group, the attendees, and my other chats. All right, so if you're excited, type excited for me in the comments. No, not comments, chat. I keep mixing up between Telegram Live and Zoom. Hey, if you're excited for the next round, the next counter, type excited for me in the chat. Awesome, you guys are ready and excited. Okay, now just I briefly talk about Telegram, right? Our team and I, we have come up with this Telegram channel. Okay, channel means that we send information out, but you can interact with us, right? You see people interacting, people commenting. Okay, and we have also done surveys, polls. So I encourage you to join us. Okay, we don't spam you, we don't tell you, we don't send you all the unnecessary things. Our team, right, we have agreed to only send the important, useful market updates, market analysis, stock updates, stock analysis, definitions, and a lot more. Okay, if you are not in yet, here's the link for you to scan. Okay, let's hold this slide for just a couple more seconds. Okay, and just now I say that, I see some familiar names, right? Jia, Selong, because they are in our Telegram community already. Yes, Jia and Selong. Who else? Let me see. Manchu also, I believe. Right, these are all familiar names to me.
I think Victor also.
Victor, yes, Victor.
Yeah.
Oh my gosh, how can I miss you out? Yes, okay. Can all in already? Good. Because we have a lot more good stuff to share with you inside our Telegram channel and even right now. So Poems, which is Phillip Securities, we are running a Forex CFD promotion. It started just yesterday. So this is fresh out of the oven, all right? Fresh out of the oven. you can earn up to 360 Sing dollars cash credits. How does it work? For more information, scan the QR code. Okay. Here, so this is how it works. You execute 8 trades in a month, you get 20 cash credits. You execute 28 more, that means 36 in total, you get 120 in total. And because this promotion lasts for 3 months, right? So 120 times 3 lah, maximum you can earn is 360 Sing dollars. Okay, if this is good, help me type 360 in the comments. No, not comments, chat. Type 360 so you can remember what's the maximum amount that you can get from Phillip CFD. Cool. Victor, Leong Sing, Zhen Hao, Kai, Sean, Salong. Wonderful. And Jun Jue. Okay. So this one you scan already, keep it one side, okay? Go and take a look at it later. Because, no, today, no movie screening. But who can tell me, who can recognize this person? Type his name in the chat. Okay, type his name in the chat. Do you recognize this person? Type it in the chat. Okay, Kai says Ip Man. Xin Jie says Donnie Yen. Kai, how come you say Ip Man and Donnie Yen? Actually, this one trick question. You say Donnie Yen, also correct. You say Ip Man, also correct. DY, yes, Donnie Yen, Ip Man. We all are familiar with this guy, right? This movie character. And the most famous line is, bring it on. I want 10 guys. I want to fight 10 guys at once. Who remembers that scene? Type me in the comments. Not comments, in the chat. Bring it on. I want to fight 10 people at a go. Epic scene. Epic scene. And this really helped me to, not help me, this reminded me that Chinese martial arts, the purpose of Chinese martial arts is not to go on the offensive, because in that context, Donnie Yen was protecting his country from humiliation from the Japanese. The Japanese invaded his hometown and he wanted to seek justice for his own people. Okay, so just to clarify, he didn't go out to cause trouble, to create trouble, to start a fight, but he wanted to get justice for his own people. And Chinese martial arts is meant to be a defensive for self-defense. Okay, if you understand this, type okay in the comments. What comments? Chat in the chat. Because this will set the ground, this will set our mind on being a bit more defensive in this uncertain environment, in this period of high interest rates. Okay. Wah, Kahi, I teach you Kung Fu. Cannot lah. Jack can. Okay. Can I? Okay. Yes. So it's really time to play defense. And these are the 3 sectors that are defensive in nature. Okay. First, consumer staples. So stocks like Pepsi, stocks like Walmart, they are inside. Okay. Healthcare, stocks like Jack's favorite stock, right? ISRG, Intuitive Surgical, stocks like UNH, United Health, they are inside healthcare. All right. Utilities, so many utilities company, American Electric Power, Dominion Energy, so and so forth. All right. Now, one of the stocks that I'm going to share with you is portrayed here. Can you guess which one? Is it Pepsi? Is it Abbott? Or is it some random utility company? Can you comment in the chat? Con. What is con? Oh, consumer staples. Okay. Zhen Long says Pepsi. Chin Jie says utilities. Jack, healthcare. Walmart. Okay. The answer is later I tell you. Now, no tech. We're talking about defensive sectors here, okay? And to when you really want to put your money into a stock, into a company, you want to ensure that it's cash rich. Just now when I was searching for this image, I asked Jack, hey, Jack, really look like you. Is he the model? Right? Coke. No, not Coke, not Coke. Victor agrees. Look like Jack. Too rich already. Okay, so this company is also cash rich, and this helps us. The cash would help the company to buffer against rougher times, against tougher moments. All right. So now I'm going to review this company to you. Are you ready? Okay, write it down. It starts with P, Pepsi. Okay, note it down, Pepsi. Can you type it in the chat also? Pepsi. Okay. Great, great, great. Good that you are following. Okay. And of course, I just now I shared already, right? This company is cash rich. So of course, we got to ask the company to show us their money. Okay. Now here, this bright blue line. Can you see it? This bright blue line. It is the net income of Pepsi. While this darker blue line is the free cash flow of Pepsi. Okay. One thing I noticed, I don't know if you notice, okay? You follow me. 2019 didn't seem like a very good year. You see, its net income declined. Okay. Its free cash flow also declined. But what happened after? A smaller decline before rising. You see it? If you see it, type yes. Okay. I repeat, from 2018 to 2019, its net income dropped, its free cash flow also dropped. From 2019 to 2020, its net income dropped just a tiny bit more before rising. Okay, if you can see this, type yes. So I know you are following me closely. Okay, Victor, Chan Yong, Yong Sing, Xiao Xia Salong, Chun Jie, Jue. Okay, perfect. Good, Now, its free cash flow also rose all the way. Only in 2021, I don't know why the free cash flow dropped. Okay, but its net income continued to rise. So, is it strong financially? Based on this, pretty good, okay, quite good. But that's not all, right? Let's look at the returns it has been bringing to its investors and to the company. Now you see, in 2019 again, its ROE, okay, this is the ROE. This brighter blue is the ROA, return on asset, also dropped. Then in 2020, flat, ROA dropped a bit more. 2020 to 2021, ROE rose, ROA flat. Then both rose. Can you see this? So don't ask me why. What happened in 2019? I don't know. I really don't know. Okay, but if you really want to know, please do the homework and share with us. Okay. Now, as every investment, right? As with every investment, there are always risks, and it is our responsibility, like what Jack mentioned, to share with you the risk involved. Okay. The first is Pepsi, right? They have a wide range of products. Pepsi is one of them. Gatorade is another one. 7-Up is another one. And some potato chips company, I think, I cannot really remember which potato chip company. So imagine if the FDA, the Food Drug Administration in US, okay, recall their Pepsi drinks, citing, oh, there's a hygiene lapse, or there's a chemical, or there's something that is illegal or harmful, then wow, how will you feel if you are the investor, you are the trader, you own their shares? Has this happened before? Okay, this has always This has happened to many, many F&B companies. The share price more or less confirm will plummet, and you just feel so sian. What is sian? You just feel so beaten, so down and out. Okay, so we need to understand that there is a risk. Nothing in this world is risk-free. Absolutely risk-free. Okay, nothing. Okay, if you understood this, type recall. Right? Type recall. Product recall. Type recall. Okay. Great. Now, interest rates. Like what Jack shared, right? If interest rates keep rising and it stays high for very, very long, I don't know how long is very long, but maybe let's say it stays high for 2 years. Is it possible? Maybe. We cannot rule out that possibility. There's always that possibility. It could stay high for 2-3 years. And when that happens, it should affect most of the stocks, even if they are in the defensive sector. Okay, so if you understand this, type RATES, R-A-T-E-S, in the chat. In the chat. Okay, cool. You guys are warmed up and pumped up. Salon, lately, Coke seems to have some problems that their ingredients is cancerous by the EU. Yeah, this always happens to F&B companies. So you got to know, you got to be aware of this risk and invest with both your eyes wide open. The last thing that Jack and I want, right, is that you invest blindly just because, oh, this guru said so, oh, because Ben said so, because Jack said so, because somebody messaged you. Okay, and so with all this out of the way, right, let's have a look at the charts of Pepsi and apply this STARS framework. For those who are brand new with us, you don't know, you haven't heard about the STARS framework, don't worry. The STARS framework is an acronym, okay, for support and resistance, trend line, ATR indicator, RSI indicator, and lastly, sentiment of the market. Oh, by the way, this background, not taken from internet, okay? I took a photo of it at about 4 a.m. in the morning when I was in East Malaysia last month. Yeah, I didn't expect to wake up to such a beautiful scene. Yeah, so if you have taken this down, either a screenshot or you have jotted it down, type OK so that I will continue to and take a look at the chart of Pepsi. Okay, if you have jotted it down, type OK so I can move on. Okay, good. Okay, so before we take a look at any individual stock or any individual counter, it always makes sense to take a look at the overall US market. Okay, and right here is the chart of the S&P 500 futures. Can you see here? Okay, let me type it out for you because the words can be a bit tiny. S&P 500 mini futures. For those who are joining us for the very first time, you'll be thinking, what is this? How come Ben talks about this? All the while other people only talk about S&P 500 ETF, which is SPY. Why he talk about futures? Okay, the first reason is futures moves almost 24 hours, almost every single day. Okay. Second reason, futures allows you to understand the market sentiment better just because it's open almost 24 hours a day, because it cuts through, right, 3 different time zones. The first time zone early in the morning is the Asian time zone. So Japan, that's where Japan will start trading. Australia will start trading. Come Singapore about 3 o'clock. Europe wakes up, Europe will start trading. Germany, Spain, London. Okay. And when it comes to Singapore timing, 9 plus, 10 o'clock, the US market starts to open. Activity. Victor, yes, I brought it up in the last webinar, but because I don't know, I think there are some new people over here, so I have to share a bit more. Okay for me to continue sharing, Victor? Can I? Thanks. Right. So you can tell whether the S&P you can tell whether investors, traders are bullish only in the Asian hours, or did that bullishness carry on to the European hours, which is London, Germany, right? And did it continue in the US session? If either one did not, if it did not continue in either sessions, right, then you got to be more careful, a lot more careful. So is everyone clear on why we are looking at the chart of the S&P 500 E-mini futures? If you are, type yes in the chat. Can I? Okay, fantastic. Okay, now the first thing, I've already drawn the support and resistance zones, the lines for you. I've also drawn the trend lines. Now, one thing you can take note right now. Do you see this? The value, right, of the S&P 500 futures is at its upper trend line here. Can you see this? What does it mean? That means it could actually be rejected by the trend line and hit down. Okay. Secondly, let me use a different color. This purple, hang on. Okay, let me show you. Yes. So this purple line here, right, is the RSI indicator. Okay, RSI, for RSI, when we say that it is above 70 or above 70, it is overbought. Okay, below or less than 30, it is oversold. Meaning at the overbought area, you will not be looking to buy, you'll be looking to sell instead. Here, you can be looking for accumulation to buy. Okay, and how you can read it now here. Can you see the figure? The figure is 68.40. Now, can you tell me 68.40, is this RSI value considered nearer the overbought region or nearer the oversold region? If you think it's overbought, type OB. If you think it's oversold region, type OS. Victor says, good that you have the middle line. Yes. Yes. Okay, anybody say oversold? No, right? Everybody says overbought. Yes. So what does this tell you? This tells you that should you be looking to buy right now? Maybe not. Maybe not. Okay. Good to be a bit more patient. I see a question, or rather a statement here by HME. RSI divergence. Yes. Yes. If you can see it, good. If you cannot see it, join our Telegram channel, because we keep talking about it we also share that RSI divergence is a strong warning bell. Okay, it doesn't mean that a reversal is going to happen immediately, but there is a high chance that the price could drop if you see a bearish RSI divergence. Okay. So this is the backdrop for the daily chart of S&P 500 futures. Let's look at the weekly chart. Okay, let me delete this. Weekly chart, yeah. So even if the value goes up, there's just this limited headroom here. It could just go up to 4,555 thereabouts before coming down. There is this possibility. Okay, so in the near term, we should be a bit skeptical of the bullish move in the S&P E-mini futures. All right. But in the longer run, maybe in the next few months, I think this bullish momentum should continue. Okay. If this is clear, type clear in the comments. No, not comments, in the chat. Okay. I repeat, in the very near term, the value of S&P 500 could continue to go up before coming down, or it could just come down from here. But in the longer term, which means months down the road, the S&P 500 E-mini futures value should continue to be bullish, should continue to rise. Okay, can I? Okay, with that, then Ben, you told me about Pepsi. Where is Pepsi? Now, this is the time. Okay, let's look at the chart of Pepsi. Okay, do me a favor, do yourself a favor, type PEP. Okay, that's the ticker for Pepsi, PEP. This one very important, type. Okay, help you remember and help you key in the correct ticker symbol. Okay, great. So applying the stars framework, remember the first S is support and resistance. So I've done that for you to save all of us time. Trend line. Okay, I've already done the trend lines. I have the ATR indicator up here. I have the RSI indicator in purple over here. Okay, now let's analyze the chart of Pepsi first. So all the while, it has been in a very nice uptrend. Can you see this? If you can see this, type yes. Right, it respects its trend lines beautifully. So this is what I mean, a very nice uptrend and beautiful uptrend. Okay, yes, good. The rest, can you see this? If you cannot see this, let me think of another way to present this. Can I? All can see, Okay, perfect. So we can conclude that Pepsi has been very bullish. Okay, even right up, even from the start of 2023 here. Okay, let me mark it out so you can see better. 2023. Here, this area. Okay. Now let's talk about the last S in stars. Okay, I type it down for you. So STARS, support and resistance. Trend line, ATR indicator, RSI indicator, and sentiment. Okay, typo. Sentiment. Yes. So to understand or to read the market sentiment, it's actually quite simple. You ask yourself, do you see more green or red candles in this circle area? Okay, can you type it in the chat for me? Do you see more green or more red candles? Green, G. Awesome. Very easy, right? Tell color only. Next, are these green candles larger in size or generally smaller in size compared to the red ones? If the green candles are generally larger, type L. If they are generally smaller, type S. L. Correct. So that's how we read the market sentiment. Very simple, very straightforward. Okay. So now we have the trend lines, we have the support and resistance. Right, you see the price is very near the support area and this trend line area. Right, can you see this? So I'm actually keeping a very close watch on Pepsi. Okay, and this is the reason why I'm introducing this stock to you also. Okay. Now, because support is a level of support, right? Everybody knows that. Trend line is also a diagonal support. So when you have this area this is a very strong support area, extra strong support area. Okay, then if we were to enter, okay, I never say you must buy, I never say now or when. If you decide to enter here, let's say 184, 185, okay, then you need to decide for yourself, where should you put your stop loss? Okay, and why I say you need to decide, because a lot of people, they don't have a stop loss. And when something unexpected happened, like just now we discussed about the risk, right? There are two risks. The first risk is the product recall. If you can remember, product recall. That's like somebody shared just now, right? Coca-Cola. The EU found some substance inside Coca-Cola not so good. Then immediately the price should tank, the price should drop. So you don't want the price of Pepsi to drop like 30% before you cut your losses and run away. Okay, so you need to look at the ATR indicator. And here, this is where you can find the value of the ATR indicator. Let me mark it up for you. Here. Okay. That's the ATR indicator, and the value is 5.33. But obviously, I won't advise or recommend that you put your stop loss just $5.33 below. Okay, I recommend probably 2.5 times this value. 2.5 times 5.33, that is about $13 away. Okay, if this is clear on where you should put your stop loss at, how you can use the ATR indicator to determine your stop loss, type ATR in the comments. All clear, eh? 178. How come put at 178? 13. Let's say you enter at 185 to minus 13, it should be 172 there about. Okay. So let me change this color to red and bold it. Okay, so if you were to enter here, your stop loss would be somewhere here. Okay, you also check your RSI 54. Okay, no, is 54 okay? If it's okay, type okay. Okay, right? Not too high, not too low. Okay, then because just now I mentioned support and resistance zones, right? Price tend to hit, then reverse, hit, then bounce up. So now we are smarter, right? Here, this can be your take profit area. Okay. Let me choose a darker green here. Okay, then you say 195. Okay, 195, we can round it up a bit more to maybe $200. Why? Because 200 is a psychological price level. Okay, it's like you go and buy you go shopping along Orchard Road. You see a pair of shoes, $98. And then your wife asks you, hey, dear, darling, how much is the pair of shoes that you are looking at? How much is the pair of shoes that you're looking at? Then you tell her 100 lah, right? I don't know how specific you will be, but I'll not tell her 98, I'll tell her 100. Or maybe you tell your wife, $50 only. No lah, I hope you don't do that, okay? I hope you tell her or tell him the truth. Okay, so it is a psychological level. You can probably push it up to 200. Okay, but remember, all this is just for sharing purposes and education purposes. Okay, not a buy or sell call. Where's 200? Not a buy or sell call. Okay, so if you understood what I just shared with you, type 200 in the chat. Yes, I got it right now. Type 200 in the chat. Okay, if you are clear on the STARS framework, if you are clear on on how you can apply it, what you should be looking out for, type 200. Okay, so your take profit can be about $200, while you can consider your stop loss to be at about 172. Okay, good. Wow, good. Okay, now I would like to find out something from you guys. Did you find any value in today's webinar? Type yes if you did. Great. Jack, Yong Seng, Victor, SH. Wow, so many so fast. Okay, good. Do you like the STARS framework? Did you find it useful? If you found it useful, type 1. Type 1. You found it useful? Type 1. Very good, very good. Because you know what? This is just the tip of the iceberg. Then we think, wow, Ben, what are you talking? Today, I learned so much already. You just tell me this is the tip of the iceberg. You know what? There's so much more to this STARS framework that I would like to share with you personally, upfront, personally. Okay. Therefore, our team, we are planning to do a physical seminar. Okay. So we need to go and find a venue. We need to set up the venue. We need to get the logistics in, probably get some food in, some drinks in. So please do us a favor, if you want to find out a lot more about the STARS framework, about TradingView, how you can use it to your own benefit, right? Scan this QR code now. This is not to register, okay? Because we haven't fixed the dates yet. But this is to tell us that you are interested. If you're not interested, then I don't bother to look for venue already. I can go Orchard, can go shopping. Or go Sentosa. I'll go and find Jack. Okay, and after scanning, okay, we'll give you a couple of minutes, okay, to fill up the interest registration form. Okay. Okay, so who is done with filling it up? Type me in the comments, not comments, type me in the chat. The form very easy to fill one, no need so long. Unless, you really have a strong desire to share. Okay, so the venue is not confirmed yet. The date is not confirmed yet. It should be somewhere late August or early September. We hope to be able to secure the venue to come up with the full syllabus just for you. Okay. So you have done filling it up, type me in the comments. Not comments, the chat. Okay, thank you, Zhen Hao. Zhen Hao. Thank you, Xiao Xie. Okay, the rest. Okay, take some time after the webinar and fill up, okay? Because I have something else to share with you, one other good stuff. Okay. If you like everything, bonus. Oh, yes, talking about bonus. Jack planned for a bonus for you guys in our Telegram channel. Okay. So let me go to the Telegram channel URL. Where's the URL? Okay, if you are still not yet in our Telegram channel, join it. Jack will be sharing an analysis on a secret thing, secret stock, secret ETF, I don't know, secret counter. Okay. Okay. Now the last thing for today is to open an account with us. You'll be thinking, why do you need to open an account with us, with Jack and I? Okay, because Jack and I, we are from the same team. At times we come up with special reports just for our clients. Okay, if your account falls with another team, I cannot say that for you. I cannot promise you anything. Okay, if your account is with Jack and I, we will share with you exclusive insights, exclusive reports, exclusive webinars. Okay, and this account that you are going to open with us today is a low cost account. And everybody, can you type low cost? Zhenhao, support CFD team, support Jack and Ben and team. Thank you. Okay, type low cost. Type LC also can. Shortcut LC. Okay, low cost, because we believe that every dollar counts. When you're trading the stock market, when you're investing in the stock market, money matters. Okay. Okay. So with that, we have come to the end of our webinar. Thank you so much for being such awesome attendees, such responsive attendees, and thank you for giving us this honor, this privilege to share our insight with you. Okay, give yourself a big round of applause, and thank you very much, everybody. Thank you, Sean. Thank you, Manchu. Thank you, Wenjie.
Thank you, everyone.
Okay, if you have any questions, right, drop us an email or phone us up. Okay, call this number. Look for Jack. Look for Ben. Okay, next week the both of us will not be around for the first few days because we are flying overseas to conduct to conduct live seminars for our foreign friends. Okay, so quickly think of your questions. Correct or not, Jack? We are going overseas, right?
Yes.
Wow, I look at the itinerary. How many presentations are we? How many seminars are we giving?
One day we are giving 3.
Wow, 3.
3 for 3. Wow.
Okay. Wow, don't say already.
Okay, say.
Okay, guys. So if you like our presentation, you have questions, quickly email them to us. Call us, okay, before next week. Can? If that is okay, type okay in the chat. Type okay in the chat if you understand, and that is good with you.
If you like
Yeah.
our sharing, type the stock we shared just now in the comment. What you learn in the comment. What stock you learn from us. Type it. TLTP. Yes, thank you.
Victor, got typo, Victor. Make sure you type properly when you enter the trade. Don't buy the wrong thing. Okay, yes. Okay, so with that, we shall end our webinar over here. Charmaine, over to you. Bring the music on, please. Thank you.
Thank you, everyone.
Thank you, everybody, for coming.